Thank you for joining us today. Excited about the opportunity to talk to you a little bit about some of the trends that we're seeing in cyber insurance as well as cybersecurity. So we're going to talk a little bit about those two trends. And my name is Paul Hager I'm the Director of Solutions here at Elevity. We're a proud new part of the Wolf Pack and partners of Arctic Wolf. And so Tim DeWard's on with me today. Hi, Tim. Thanks for joining us. Oh, Tim, you're on mute. One of the coin in the jar. Nope, still on mute. Ellie, you might need to unmute him. Still got the little mute logo.
There we go. Sorry about that.
There we go.
Good afternoon, everybody.
Good afternoon. So I'll dive into some of the introductions and a little bit about the partnership that we have between Arctic Wolf and Elevity, and then I'll hand over to Tim to provide us some insights. I know you've been having conversations, Tim, with folks in the industry and cyber insurers themselves, and I think you have some great stories to share with us here today. So again, my role here as the Director of Solutions is I lead our Emerging Solutions Evaluation Committee, and it's a group that I work with to help constantly be looking at what's going on in the industry, the challenges that we're seeing our customers face, and then go and start to use some of the industry bellwethers, right? Look at Gartner, Forrester, and IDC, and some of those that kind of help us identify what partners and what new vendors are having an impact, and not new just like the latest technology, but also just who's having an impact in the industry and solving real business problems. And then we kind of group that into a list of typically the top 5, and we start evaluating, doing demos, evaluating the actual nitty-gritty of what their solutions and partnership and go-to-market strategy is. And we had identified a trend clearly that obviously that security was an increasingly important area, but we were starting to see signs that just the existing tool set, kind of wasn't mature enough. It wasn't significant enough into the security solutions. It's not enough just to have the latest antivirus technology or the latest firewall. Bad guys were certainly investing at higher rates than that. There's a whole small business network available to upstart cyber criminals that want to go and buy buy ransomware software from these large ransomware groups, and then get support from those organizations where you as a small business, criminal small business, then can deploy that in customer networks. And obviously we're seeing attacks increase over the course of COVID and towards small businesses. And all of that led us to say, even if we have some of the best leading solutions, which we do, we have some of the best technology partners, I think, out there in our technology stack, partners around critical areas like email security and at the perimeter with Fortinet and in environments with EDR solutions. But all of that still misses a part of the piece of the pie, right? There's still parts of the network, parts of the process, and just data that there's too much data to ever even look at. And so when we went out and looked at partners, Arctic Wolf quickly came to the top of our list, and then we could really see that their investment that they spend, I think, over $50 million a year in research and development in their own tool. They didn't just take something off the shelf, but built a tool and a technology to ingest all that data, and didn't look at it like, well, let's charge our end customers by the gig of data that we give them. They said, we need to see all that data because we need to have that visibility. And then they had that really great concierge approach, which is something that we have here at Elevity. We have assigned, customer success specialists, give people single points of contact to be able to have success, and really, put the people behind the technology, which is often even more important than the technology itself, is the communication, the touch bases, the security planning and strategy piece to it. And so when we got to meet Arctic Wolf, not only did they have a great technology solution, but they also had that operational maturity wrapped around all of that concierge approach within their own technology and their go-to-market and partnership. And Jeff Dolzer and I had the opportunity to go visit their headquarters in Eden Prairie in Minnesota, meet some of their executive team, and then only kind of continue to confirm what we had evaluated already as really strong partnership, really great go-to-market approach that was very client-centric and had real outcomes, had real tangible examples of where their solution solved for cybercrime going on inside of their customer base, and they had a real way to staff for the multitudes of people that are going to be needed given their growth as an organization and the growth in demand for outsourced SIM and SOC that was going to be going on in the industry. And we've really come out of the gate firing and have had a great just over first quarter working with Arctic Wolf. Just looking at the data points from our existing customers that we've onboarded, I think they've seen something like 314 million individual data points that they've condensed down to less than 8 actual security events to talk about. So that is the beauty, is they reduce that noise so that what is real and what requires action, it's the same concierge team that we're working with in Arctic Wolf, and it's the same team you're getting with your existing relationship with Elevity. And we take this, sometimes feels like a mountain that you have to climb to get security up to the point for your next major cyber insurance renewal, and really simplifies all of that. And I think that's a kind of a good dovetail into what I think Tim is going to share with you a little bit today. Is we get brought to the table, as your outsourced IT strategist, with your virtual CIO or solution architect. We see cyber insurance renewal paperwork every single week, and I get asked to get involved in those discussions and review those applications. And those applications have changed a lot in the last 6 months. Not only do we know the price is changing, but what they're asking and why. I think that cyber insurance industry is absolutely catching up. So the partnership is timely. I think we accurately predicted the trend. Obviously, Arctic Wolf accurately predicted the trend in the demand for increased cybersecurity, and why the time is now for what we would call managed detect and respond, the SOC that oversees to make sure all the doors are locked at night. And then also the managed risk side of it, which is doing the vulnerability scans both internally and externally, meeting the increased compliance areas, right? CMMC is also something we hear about every other week, it feels like, and new compliance standards that are coming out. And finishing that off with managed security training and awareness. One of the best things you can do is just talk to your staff, educate them, teach them about cybersecurity, so that, because they're really your first line of defense. They're either going to make the click that starts your bad day, or they're going to make the decision to not make that click. Talk to their IT specialists and avoid having one of those cyber events. But today we really want to dive into cyber insurance renewals. Was just on with the prospect yesterday that was talking about how they have a renewal coming up in May. They've been told that things are going to be very different, and the IT department is sometimes sitting over here, and the director or CIO is over here, and the CFO is dealing with the renewal. And it really is going to take technology and updated processes and approaches to meet the financial objectives and business objectives. So, Tim, what are you seeing in cyber insurance challenges? And just first of all, thank you for being a part of the partnership here with Elevity and for joining us today.
You're welcome. Excuse me, and thank you for having me. Yes, that's exactly what we're seeing. It's a great summary and segue into the conversation. I'm going to attempt to make business insurance and cyber insurance exciting and interesting for the next 50 minutes. My assumption is the majority of people on this call are in IT. Maybe we have some folks here on this call that are outside of IT and actually sit on the business function. And what I want to talk about over the rest of the time that we have here is where those two worlds meet, and where business insurance and subsequently cyber insurance, which fits underneath business insurance, how that is relevant to you, and what can you do yet today or tomorrow to get ahead of some of these trends, because nobody loves a business surprise, especially a bad one. Nobody loves a surprise IT project. By the way, I've polled a lot of customers to find out who likes surprise IT projects. I have yet to have a single person raise their hand. So my guess is everybody's in that camp as well. Let me advance the slide here real quick. So I want to talk about, again, cyber insurance is generally underneath business insurance, which is, as Paul mentioned, why typically it is driven by the CFO and the finance organization. There are increasingly becoming technical requirements that tie into that, and then there is I'll call it a miscommunication or a lack of communication that's happening. But before we get to that, we want to talk about what's happening in the market, what's really driving a lot of what you're going to see here in the next couple of bullets and slides as we go through this conversation. First and foremost, and this is going to come as a surprise to nobody on this call, but it's where we need to start, and that is with the increase in cyber attacks and ransomware in particular. Insurance companies have, quite frankly, they've gotten soaked over the last 12 to 18 months. There's not a lot of published information about exactly how much they have paid out versus premiums that they have taken in, but we know for a fact that insurance companies are paying out the vast majority of premiums, and in some cases, significantly more than the premiums took in. Now, usually when I say something like that to an audience like this about the insurance company got soaked, let's be honest, a lot of us kind of sit back and we might smirk a little bit. We might even kind of applaud and go, yeah, I don't feel so bad for the insurance companies. But in the back of our minds, we all know what that really means. What that really means is these companies are not in the business of losing money. And so they're going to adjust their models, they're going to adjust their coverage, their requirements, and their rates to the point where they actually are making money. And we know what that really means, and that means a change for us is coming. And so the best thing we can do is get out ahead of these things. And essentially what this boils down to is there is a reduction in coverage that is starting to take place. And then there's also an increase in rates that actually has started a while back, meaning about 12 to 18 months ago. And the last several months, some of the information that I've been able to gather and in conversations I've had with actual insurance agents and brokers is rates are going up substantially. So let's talk about that in a little bit more detail. You can see on the left-hand side of the screen here that there is a reduction in overall benefits. Probably more importantly and more common in the conversations I've had is we're starting to see carve-outs. We're starting to see a change in the language and the actual policies that are being written. I don't know if you guys saw this, but recently Lloyd's of London, one of the largest insurance companies in the world, and also to some extent one of the most unique for some of the interesting policies that they write, Lloyd's of London actually came out with a statement. It wasn't an official policy change. It was really almost like a letter of intent to the industry, starting to indicate that they are going to look at carve-outs relative to acts of war. So think of this as like acts of God in a more traditional or personal insurance policy, in which the insurance companies are starting to say things like, you know what, if your business, if your company is collateral damage as a result of two nation states, as an example, going at it, an act of war, one nation state attacking another and using those, developing those tools. And if somehow you get caught in that crossfire or that tool that was developed by one nation state to attack another, if that is used against your company, that is simply just collateral damage, and we don't necessarily intend to cover those in the future. So it was a really interesting statement that was made. Again, this is about a month and a half ago, if I recall correctly, where they're starting to set a precedent in the industry that says there will be carve-outs for specific situations in certain instances. We'll talk a little bit more about carve-outs in a couple of bullets and a little further into the slide conversation about some other specific carve-outs that you might see around timelines, but we'll put that on pause for a moment. So one big piece is reduced coverage. And you can see a couple of quotes here on the screen from, for example, the CEO of AIG. The other big trend that we're seeing in the industry is an increase in rates or an increase in premiums that are being paid. Now, this data that you see on this slide, specifically that second bullet there in the middle, is a bit dated. I'm going to give you some really specific examples just from a couple of weeks ago in which those numbers are very, very low, quite frankly. We're seeing anywhere from 2x, 3x, 4x, even 5x increases in premiums. And we'll go through a couple of examples here in a little bit. But in the nutshell, what's happening to cyber insurance companies and insurance companies is their models are upside down. And they are starting to force a change now in the industry. And we'll take a look at what those changes look like, and again, specifically how they impact you and your organization. So one of the big changes that the insurance companies are starting to make is around the types of controls or technology that they are requiring to be in place for companies to become insurable. And I'd like to walk you through some of those controls so that you can hopefully get ahead of some of those changes that are coming. So we'll move on to the next slide here. Paul, there we go. Thank you. So what you see on this slide right here are what I'll call the top 12. So this is not an all-inclusive list, but these are the top 12 things that we are seeing from a security controls or technology that insurance companies, cyber insurance companies, are starting to either strongly recommend or in a number of cases actually require that customers put in place if they want to renew their policy. Now, I'll give you one example, and I'm going to draw your attention to the top left-hand side, which is MFA, controlled access. MFA is becoming almost ubiquitous across the board, meaning it is a requirement that most insurance companies are starting to require. And if you don't have MFA, multi-factor authentication, in place, you cannot renew your policy, you cannot get a policy, you're effectively considered to be uninsurable. Okay. Now, you'll see the key control columns, the first column and the third column. These are the technologies or the processes that need to be in place. What you see next to that is Arctic Wolf solution. The little half circle or full circle really kind of indicates how we as a company either solve for this or we help support and strengthen this particular control that A, makes you more secure, and B, puts you in a more positive light with the insurance company. Now I want to walk through a few of these and point these out as an example. What we're seeing is the top 3 or 4 are, and I mentioned one of these already, which is multi-factor authentication is almost ubiquitous. I stopped short of saying it is ubiquitous because I haven't talked to every single insurance company in every single situation, obviously, but it is a very common control that we see in place. The other one is the second one that you see on the list, which is secured and tested backups. Another important one is actually the bottom right key control, which is prepared incident response. So in other words, having an incident response plan in place and having that in place ahead of time before an event actually occurs is very important. And then the second from the top on the third column, which is secured endpoints. So having a good EDR tool, endpoint detection response, upgrading maybe from a traditional or legacy AV and doing something a bit more modern from an EDR tool perspective. Those are probably the most common controls that we see as a requirement that insurance companies are starting to require of their insurees. Now you can see a number of others, and by the way, take a screenshot of this if you like. If you would like, I would be happy to, and we would be happy to share this slide with you. So if you want to follow up with us after the call, we would love for you to have this information because again, the whole point of this webinar that we're doing here today is to help you get out in front of some of these things before they become a surprise IT project. And I'm going to have some additional recommendations here on the next slide as well. But again, we're going to spend a lot of time, or we've already spent a little bit of time, and we're going to spend a bit more time on this slide as well. So again, screen capture it, take some notes, follow up with us after the call, and we'd be happy to send you this slide as well. Now,
yeah, and I'll just add to
ahead,
that,
Paul.
Tim. You know, multi-factor authentication, where this is on everyone that we have seen top of mind, and it's really how far they're even willing to go with multi-factor. They're starting to make statements like, you must have multi-factor authentication on everything. Like they're just making blanket statements as to where it used to be, do you have multi-factor authentication enabled on your cloud services, mostly meaning Office 365 or G Suite, into is it on literally everything in your network to be insurable? And that can start to get into, do you have multi-factor to get into local devices and servers and other areas that, you know, Arctic Wolf can gather those logs, and then, you know, here at Elevity, we can help make sure that you have the right multi-factor tool on the front end to kind of complete this circle out into be full, right? So we're combining solutions as we should as your solution provider to bring you something that kind of holistically resolves this area. But we just reminded anybody that's an existing Elevity customer, we actually recently just ran a little video and sent it out to just remind people what accounts maybe you have multi-factor, but you forgot about a few people. We're constantly reminding our existing clients, just it needs to be everywhere and on every user. And And we still get some pushback sometimes. We get some folks that are like, no, I think we're good. We're not too worried about people being inside of our network. And those are always challenging discussions. But I think to be insurable and to be prepared, these are boxes you're going to want to get checked.
Yeah, Paul, you bring up a great point, and that is the level of implementation on some of these things is obviously it's all over the board with customers, and then it's all over the board with what insurance companies are recommending and or mandating as well. I'm surprised almost every week that I get engaged in a conversation like this to hear the differences between what customers are hearing from the insurance providers and the carriers are starting to require. They're scrambling, which means a lot of this information in the next week, coming weeks and months will continue to change and evolve. The carriers, the insurance companies, that is, specifically, they're still figuring this out. They're largely business people. They're largely mathematicians and actuarials and stuff like that. They're not IT people. They don't have backgrounds in IT. And so they're learning this stuff as quickly as, quite frankly, some of the rest of us. In some cases, they might be a bit behind. In some cases, they're a bit ahead of us. But they're changing their recommendations, again, what seems like almost on a weekly basis. But one thing that is a common theme and trend, like I mentioned, these are the top 12 controls that we've seen, is the level of detail that is increasing with each one of these. So Paul, to your point, before it was, do you have MFA, yes or no?
Right.
Now it's, okay, you have MFA, tell me more. Is it just privileged accounts? Is it just on cloud? Is it just on prem? Is it just your C-level executives? So they're getting smarter, they're getting wiser, and so they're starting to ask more questions about these things.
Yeah, I've also seen that EDR item as well. I echo that. We've seen that enhanced detect and respond request, and I started to see even starting it to be prescriptive, like, do you have EDR and is it one of these 4 specific solutions? Because I think, again, they're looking for easy buttons a little bit because they are mathematicians. And so somebody told them that these 4 are good. And so they put it on the list, right? Why not make it easier? Because they don't want to get into the technology. But directionally, there's one thing is common is it's all getting more intense than it was a month ago, 2 months ago, or 6 months ago.
Yeah, long-term, Paul, I'm not sure what your thoughts are on this, but my personal thoughts on this is I think long-term there will be some standardization. We're clearly not there yet. What that looks like, I don't know. I have some ideas around, like, if you guys are familiar with PCI and what that did for the insurance, what that did for the payer market. So think like credit card companies and those types of things. When they introduced PCI, that was largely a set of standards that the payment card industry kind of came together and said, these are the things that we consider to be best practices. And they created some standardization around that. I can definitely see the insurance companies at some point heading in that direction. I don't know that to be true. That's just kind of my gut instinct. I'm kind of curious, Paul, what you think about that.
Yeah, it feels like there has to be at some point, right? We have to get to a place like we did with, I think PCI is the perfect example, right? If you take credit cards, which most businesses do, you go through a common set of PCI questionnaires, and then there is some level, depending on what level of PCI you are, some greater level of inspection. And I think we're headed in that direction. How much assessment will be a part of that? How much audit will be a part of that? I think we're still probably a ways out from that. But it seems to me like the industry is still largely looking at what is your total revenue as a business as the primary line of your risk exposure. And we're just now working the details up about how risky you really are. It's still such a math problem. And we that know the technology go, why don't these folks like ask these questions, right? Why don't they ask when's the last time you've had a NIST-based assessment, right? Like that's at least a standard we know about that is some standard security controls. And I don't know if that's just they don't know or they don't want to cling to one framework yet. It feels like it's more of a math problem than a technology problem, and we're just on the cusp of turning that corner.
Agreed. One other one that I'm going to talk about here probably on the next slide, but one that is actually starting to kind of race up this list. And the reason it's not really on here is it's implied in a number of these things, a number of these controls, and that is 24/7 monitoring. Now I bring that up because just a couple of weeks ago, I sat down with a cyber insurance broker. This is someone that actually works for a large cyber insurance brokerage firm, a global company actually. And one of the things that she mentioned is she was in a very specific situation just a week or so before that, in which one of the carriers, and going through a renewal with a customer, and going through that conversation with the carrier, one of the things that the carrier said is, "Are you doing 24/7 monitoring?" And the customer said, "No, we're not. We're not staffed for that." Now, this particular insurance broker was familiar with us, Arctic Wolf, and our services. And she actually said, "Here's a company that you need to reach out towards." And the carrier basically said 24/7 monitoring is something that we're going to require for your business, require for you to be insurable. And so, again, having that broker aware of who we are and what we do, because it's a big part of what we do as Arctic Wolf. We do 24/7 SOC services. And so that's another control that's not officially on that list. Again, it's kind of implied in there, but it is probably like a 13th one that is starting to kind of race up that priority list. And again, there's a story and some evidence of carriers that are starting to pick up on that as well. So the other thing I want to talk about here is you can see a number of bullets here. Let's start at the top one, which is these new controls, the controls, and I say new controls. Now, some of you may actually have some of these controls in place, in which case they're not new, and that's fantastic. For some of you, if you don't have some of these controls in place, obviously they're new, but the important piece here is to understand that they are becoming table stakes. And again, what I mean by that is the carriers are basically saying, if you don't have these things in place, you are uninsurable. It's not a matter of if you put these in place, your premiums will go down or your increase won't be as significant. It's a bit more black and white, and that is, if you don't have these in place, we will not insure you. Get them in place, and then we will insure you. And by the way, your premiums are still going up. Now, the more of these controls that you have in place, the more that you can show that you have these controls in place and that you have process around them. One of the things that the broker was telling me that I thought was kind of interesting is then at that point you can start to kind of plead your case to an insurance provider or a carrier to say, look, we have a number of these things that you've asked for. We also have a number of these things that we're doing above and beyond what you asked for. Here is why we think we're in a better security position than maybe what you think we are. And like I said, a lot of these carriers, based on the information I've gotten from them, is they're still figuring this out. So she kind of mentioned that as a broker, she said one of the things that she does is help plead the case of her clients to the carriers to maybe help kind of draw down some of those increases. And I thought that was a really interesting data point. So new controls or table stakes, that's kind of the primary point here. We talked about this already a little bit, which is 24/7 managed detection response, which is what MDR stands for. This is essentially what we as Arctic Wolf do. This is the core of what we do. So I mentioned that we are a SOC as a service. This is becoming a more common control. And if you're not familiar with a SOC and MDR, allow me to give you an illustration or an analogy here, which is think of SOC services or 24/7 monitoring similar to a home that you own. And of course, you go out and get a service like an ADT to protect your home, looking for doors that are open, intrusions, intrusion detection, and things of that nature. Where that analogy breaks down a little bit is we take it a step further, and that is if someone does actually end up on your doorstep or in your home, we can do some amount of containment. Which is almost equally as important. One is you want to have a strong security perimeter defense. At the same time, you want to then also plan for what happens when somebody does get inside my network. How do I quickly detect it? And how do I quickly respond to it? Because if they're in my network, but just for a short period of time and can't do any damage, my risk is essentially really, really low. And one of the things that we're seeing in the industry is people are putting up really good, really strong defenses and walls around the perimeter, which is a challenge in and of itself, by the way, is the traditional data center is breaking down and we're adding cloud services and the perimeter keeps changing on them. But that said, one of the things that we do see customers failing to do is planning for what happens for when I actually am breached. Outside of going out and getting cyber insurance that will make me whole in the long run, what can I do to mitigate that risk and contain that threat as quickly as possible? Because again, if someone's in my network, but only for a few minutes and they can be contained quickly, right, my risk is very, very low. By the way, let's have a fun little Q&A, right? I'm not sure if we can make this interactive or not. Let's try this. Let's do a little break here since we're about halfway through the webinar. I'd like to ask you guys a question. So look for that little hands up button.
I think it's a little question bubble. Yeah, little chat bubble.
Here is my question. There's something in the world of cybersecurity called dwell time. And dwell time is really the amount of time that when an intruder actually gets into an environment, the amount of time that they are in the environment before they are caught, / discovered, or what I like to refer to as they reveal themselves. So think ransomware, they've been in the environment and now they send you that email saying, hey, we're here, surprise, you owe us money, right? What is the industry average amount of time of dwell time? In other words, the industry average, the amount of time that someone is in a network. And with the hands up, see how we're going to do this. I got an idea. Is it more or less than a week? If you think it's more than a week, raise your hand. We got a couple. So the majority are either looking for the button or they think it's less than a week. We got a couple more that are saying more than a week. All right, so let's go with the answer to keep things moving here. It is more than a week. It is substantially more than a week. There are a couple of different reports out there. One of them says 208 days. Another one says, I think, 194 or 196 days. Pretty close. So we'll split the difference and we'll say 200 days. So 200 days is the average amount of time that an intruder is in a network before they get caught. Think about that for a second. That's a really, really long time, but it makes sense. If you're going to execute ransomware, you have to be in the environment for a really long time to really encrypt everything. It takes a while. And what's the first thing that somebody does, someone who's asking for a ransom, they do when they get in the environment? First thing they do, one of the first things they do is they look at financial records. They want to know how much money, cash on hand, your company has so they know what kind of ransom to ask for. And this becomes actually an interesting point. We're going to talk about this in one of the next bullets here, why that's relevant, why that's important to know. Now, I'm going to end the question session here with another stat, which is with Arctic Wolf. Again, we do 24/7 monitoring, 24/7 managed detection and response. The average amount of time that an intruder is in a network when the customer is protected by Arctic Wolf is less than 30 minutes. So this means an intruder potentially comes into the network and within 30 minutes or less on average, we are detecting them and then we are helping to contain that threat and get them out of the environment before they can do any damage to your environment. So a little fun fact and a little Q&A there around 24/7 detection and response. Now, let's get back to insurance and insurance providers here for a moment. So I mentioned earlier that rates are going up and they're going up substantially. So based on the conversation that I had with a broker a couple of weeks ago, I want to give you a couple of real world examples, but obviously removing the names of the customers to protect the innocent. So you can see here in the bullets 4 to 5 increase in rates, and retentions or deductibles are also increasing as well. So let's break that down into a real situation, a real story here. She gave me several of examples of customers that had $5 million policies. This is $5 million in coverage to the business. Smaller businesses, obviously, in terms of having about a $5 million coverage policy, but they had a $5 million coverage policy. Now, last year, 12, 18 months ago, when that customer signed up for that policy, and in the years previous, that customer was paying probably close to about $30,000 a year in premiums. That same customer that is renewing now, this month, last month, next month, will be renewing that $5 million in coverage for close to $120,000 to $150,000 annual premium. So again, a 4 to 5x increase in premiums, which is a substantial increase. Imagine your homeowner's insurance tomorrow goes up 4x to 5x. Your auto insurance that you're paying right now goes up 4x to 5x tomorrow. That's a substantial change. In addition, that same policy previously had a retention, what we know in the consumer space as a deductible, probably had a deductible of around $50,000. That deductible today on policy renewal is probably closer to $250,000. So a 5x increase, give or take, in the increase in the deductible that they have to pay. The other thing that I learned in that conversation I thought was kind of interesting is that deductible, so going from $50,000 to $250,000, that deductible is payable at the moment that you make a claim. So when you come to make a claim, now if you're making a claim, something bad has occurred, of course, right? And I'm going to tie it back to the ransomware example I gave just a moment ago. But now when you make the claim, you need to bring $250,000 with you to that claim. Now where that becomes really interesting and challenging is, let's say it was a ransomware incident that I was just talking about a few moments ago. And let's say in that ransomware incident, the intruder knew by looking at your financial records how much cash you have on hand. And just for argument's sake, let's make up a number and let's say it was $200,000. They demand $200,000. You pay the ransom, and now you have to make a claim to the insurance company. They're also essentially demanding in the form of a deductible $250,000 up front. Your cash on hand has been wiped out. Now you can apply the math to whatever size organization you are. That's just one simple example that I wanted to provide. But it creates this really difficult situation, obviously, for customers to try to navigate. And a lot of these are business level discussions that have to happen, almost like tabletop exercises from a business perspective, that could and should be happening ahead of time. If this happens to us, how are we going to react as a business? Because if you are hit by ransomware and everything is shut down and you can't bill your customers and bring money in, you need to be making decisions very, very quickly. Now, on the IT side, we're looking at things in terms of how can we prevent this from ever happening in the first place. One of the ways we would argue, obviously, as Arctic Wolf is by putting 24/7 managed detection and response in place so we can catch these things very quickly before they can do any damage or help secure your defenses so they never get in the first place. All right. I've been talking a lot. I'm going to pause for a second. Paul, anything to add at this point?
Yeah, no, I will just echo. We have also seen recently a customer that 24/7 monitoring was put as a requirement, and they were given a very specific timeline in which they had to get that done prior to them being considered insurable. So that created this unexpected IT project that I think you talked about at the beginning of this, Tim. And but I'll be honest, I've also seen some where there have not been those levels of requirements put in place, and so I wonder what you would say, Tim, to we have some examples of where that has been pushed up the chain, and there is more stringent requirements for insurability put in. If someone on this call has done their renewal in the last 4 months and none of that was in there, what is your feeling for the likelihood that things are going to change for them, and how should they be proactive, knowing that there may be a similar statement of you need to have had these things in place prior in order for it to be insurable? Some are giving a 30-day window, we're seeing. Others are being told, no, you're not going to be considered insurable until 60 days after these certain requirements are met. What are your thoughts there?
Yeah, great question. You're absolutely right. Things will be changing, whether you're about to renew or whether maybe you did renew just recently. If you did renew just recently, you have what I'll call a small window of reprieve, and that you don't have to at least deal with the demands of the insurance companies in the very short term. And we'll get to the next bullet here in a second, next couple of bullets here in a second. But that doesn't mean that they won't change. Now, I'd love to be able to tell you this is exactly how it's going to change based on your carrier 12 months from now. If I were that good, I'd be probably sitting on a beach somewhere in a hammock with a Mai Tai and not sitting here if I could predict the future in that way. But I can't. What we can do is obviously look at the trends, and one of the trends that we've seen, both in the previous slide with those 12 controls, to Paul, what you mentioned a moment ago, where we're seeing things like 24/7 monitoring becoming an increasing requirement as well. What we do know is companies are having to get better at their security posture, right? We absolutely know that 12 months from now, or whenever your renewal is coming up, you will have to be in a better security posture than what you are today. So you can wait until a carrier demands certain things of you, or you can try to get ahead of some of these things in advance and try to prevent some of these things from happening in the first place. And when I say these things, I mean putting up a good perimeter defense to try to keep people out. You know, insurance, a lot of times, I've actually heard customers say this, by the way. Well, if I get breached, I got insurance, I'm good. To which I respond, that is just like you or me saying, well, I've got insurance on this house. If it burns to the ground, I'm good because I got insurance. They'll help me rebuild it. The point there is you have to go through that experience. And I've not, fortunately, had my house burned to the ground. I had a coworker not that long ago that experienced it. And it was miserable for him and his family for a really long time. It's no different in your business, right? If it burns to the ground, yes, you can rebuild it, but it's really difficult. The best is prevention, obviously, and stopping that from happening in the first place. So putting some of these controls in place sooner rather than later, rather than waiting for a carrier to demand them of you, is always a wise approach, of course, stating the obvious there.
Yeah, and the other example I'll give to your comment around, that idle time in the network, we have, as a service provider, right? We are often brought in after the detection has occurred, right? And we are kind of boots on the ground to help remediate that situation and try to return the environment to normal. And we had an incident, in the last year where we were brought in that way, and we did have a fast time to detection. So while they were in the environment, we were able to show to a reasonable degree of certainty that they were exited from the environment and that business operations were restored quickly in under 2 hours. And this was in the middle of the night where it was detected. So all the business day operations were normal. Just opening their doors that morning wasn't enough. Their suppliers, the people that organization interacted with, once they had to be notified that there was an event, even though the event was contained, we had to get on the phone with every one of those suppliers and prove that we had done enough before they would start interacting, before they would start sending them jobs. In this case, before Wisconsin would start issuing VIN numbers and allowing them to kind of get stuff shipping again, right? There was a hard pause that we had to get through that. And because we had contained it quickly enough, and because there was enough proof that we had done the right steps, not only did they open their business operations, but they're able to restore confidence from their next ring business partnerships, allow the business to continue to operate. And when they went to their insurance provider with that event, then their coverage was really only about that remediation time, instead of it being about also covering for a ransom, pulling money from cash to offset that loss of business. It could have been a whole lot worse. So there is, unfortunately, when you talk about your crystal ball being broken, mine is too. There's also no perfect solution that just promises that there will never be any sort of event. It's not a question of if, it's a question of when, and a question of when and how quickly you can respond, which is, I think, was what your point was earlier. And we have seen that in real life, and with the right tools, with the right incident response plan and tabletop exercises to play that out, there can be happy endings at the end of that. There can be, our business wasn't substantially impacted. Our insurance didn't have to get deeply involved, and therefore rates and other impacts weren't applied. So there can be good at the end of a challenging time if you're prepared and you get those steps ahead. And I think just because it hasn't happened is certainly not an indicator that it can't happen, right? And it ends up getting into, well, it just sounds scary, right? And people are telling me that the bad things are going to happen, but we really just are trying to inform and make sure people have the opportunity to be educated about what these days look like and how often we do see them. And we do have a unique perspective, right? Arctic Wolf has, I don't know how many customers off the top of my head, but you just have a lot of insight
into cybersecurity and the events from just a pure data standpoint. I think you are in a position to say with some level of authority, this is a real problem, and we see a lot of it going on.
Yeah, Paul, those are great comments. And actually, to answer that question, our customer base is in the thousands of customers that we protect day in and day out. And you bring up a great point too, right? This isn't all doom and gloom and things of that nature. Yes, things are changing, and sometimes that's scary, but there are things that you can do. We've talked about a few of those already, and actually I think that's maybe a good segue to talk about these final two bullets here on the slides, which is a lot of these new controls, and again, they may not be new to you. If you got them implemented already, that's fantastic. If some of these controls that the carriers are requiring of you are new to your environment, you don't have them in place yet. The other thing that's worth noting is a lot of the carriers are requiring, and Paul, you mentioned or alluded to this earlier, which is a lot of the carriers are requiring that those technologies and processes are in place anywhere from 30 to, I put 60 to 90 because that seems to be the trend, is it's actually getting a bit longer, at least based on that's what the insurance broker told me. She said it's really, 60 to 90 days. So in other words, those technologies, if you don't have MFA today and you go to implement MFA, it needs to be installed, up and working 90 days or 60 days before your policy is set to lapse and or renew. And so don't think that, I'll throw it in 2 days before, right, or a couple of days after. It's my intention to implement. The carrier will basically say, no. If it's your intent to implement, then we're going to create a carve out in the policy that says essentially you're not fully protected until that technology gets in place for X number of days. So it's something to be aware of. Now, if you start working backwards, and we'll kind of move into the last bullet here, if you start working backwards, that really means that at least 5 to 6 months, you need to start getting ahead of these renewals. Because if let's assume that you need to have a particular piece of technology or process in place 60 days before your renewal, and let's say it takes you a couple of months to go out and find the technology, talk to the vendors, get it installed, get it implemented, learn about it, right? You start working that reverse timeline, and you're talking about it, a good 5 to 6 months before a renewal take place. So going back to the comment that was made earlier, if you've just renewed in the last 3 months, you might think, I got 9 months before I really have to think about this again. I would argue, no, you really have maybe a month or two before you really need to start looking at that next renewal and start talking to the carriers about what needs to take place. That brings me, I think, to probably the biggest call to action that I have here, which is the title of this last bullet, which is Finance Meets IT. What I mean by that is I started out by talking about the fact that business insurance and cyber insurance being a subset of that is largely done and negotiated by the CFO and the finance organization. And historically, they have not involved IT in those conversations. But because a lot of these new controls and requirements are essentially IT controls, products, processes, and requirements, IT is now needing to get involved. And of course, again, as we talked about earlier, nobody loves a surprise IT project pitched over the wall by the business the last minute. So you really want to get out and start talking to your CFO and finance if you're in IT. If you're on the business side, if you're in finance, if you are a CFO, reach out to your IT colleagues and start this conversation. I want to tell you, this might be my last story here. I want to tell you a story from 2 weeks ago. 2 weeks ago, I was meeting with a manufacturing company in, I'll just say greater Minnesota. I'm based in Minneapolis. I was on my way up to Fargo, stopped to have lunch with a customer. About halfway there, happened to be a manufacturing company, and in particular, it was the IT folks that we took out to lunch. I was having a conversation about cyber insurance with the head of IT. And one of the things that we discussed is this point here exactly. And I challenged her, the head of IT. I said, I have a recommendation. I said, I would encourage you to, when you go back to the office after lunch or tomorrow, if you know your CFO, if you know somebody in finance, send them an email saying, I'm trying to be proactive and get ahead of some of these things. I said, I would challenge you to do that. What's interesting is she did. She went back and immediately after our lunch, she emailed the CFO. Obviously, being the head of IT, she goes to the CFO for funding for different projects, so she knew the CFO fairly well. So she emails the CFO and says, hey, we're just talking over lunch about cyber insurance, wanted to know if there's anything that I could do to help you in this process and get out in front of some of these things. And what's interesting is the CFO responded. She actually forwarded me a copy of the email, and the CFO said, thank you so much for reaching out. I really appreciate it. Your timing is perfect. They were about 5 to 6 months out. The CFO from their renewal, the CFO knew that there were going to be some technical requirements. And of course, the CFO doesn't speak tech or IT or anything like that. He said, I appreciate your partnership. I want to get a conversation set up with you next week. I want to talk to you about this. I want to bring you into the conversations with the insurance company so we can get out in front of this. He was very, very appreciative of her reaching out and being proactive in that particular situation. So that's my call to action to all of you. Again, if you're in IT, reach out to finance. If you're in finance, reach out to IT and start this dialogue and start this conversation to get out in front of it. Paul, any recommendations that you have specifically?
Yeah, no, I think engaging finance in a project that isn't just about your next infrastructure need or that maybe that old SAN you're looking to replace or about the cloud, but in a more business-centric partnership, we want to be ahead of this. And we are seeing them get quite technical. One of the last ones I saw had 3 additional supplemental questionnaires specific to specifically known vulnerabilities and breaches that have been in the news recently. There was a dedicated questionnaire to the Exchange vulnerability that was out there. There's a dedicated questionnaire to the major Java vulnerability that we just had, right? The insurers are starting to pick up on at least the headline news and adding all of that and putting all that work onto your IT group if you're from IT. If you're from finance and the business side, you're going to see this renewal and go, what is this talking about? What is Heartbleed? What is this? What is Java? Like we don't make coffee here. Like there could be a lot of questions about how detailed some of these things are getting. And I think being at that table as a partnership with finance and about really achieving the corporate goals, right? IT should always be aligned with your business outcomes. In this case, the outcome is maybe risk avoidance and maybe additional cost avoidance if you can make a strong case for how secure your business is to possibly reduce or avoid some of those increases. Maybe some of that helps offset some of the project costs you'll have to incur. And then just being aware of your budget cycles, right? Wherever your fiscal year is, as you're budgeting, we know industry-wide budgets are increasing towards security, and this certainly plays in as a part of that. But unexpected IT projects on the finance side, unexpected expenditures of any type are really the name of what it is that you're trying to avoid along the way. And what's great about the partnership again between Elevity and Arctic Wolf is we're here to wrap all of that into as a service, and oftentimes can help with even the financing portion of that to make sure that you're able to get these things in place 60 to 90 days in advance and manage how you pay for that to maybe get it into your next budget cycle. So we're here to be your partner on the business and the IT side along the way as well. But I think all great stories that I think we're able to share, Tim. And I know you were excited about some of those recent conversations you had with brokers. We're always talking to ours here, even within Elevity. Obviously, we have critical insurance requirements because we are responsible in a lot of ways for a lot of our customer networks. And so we're always evaluating this ourselves and having these proactive discussions with our business side too. So we definitely follow our own guidance here. We have the same solutions that we're recommending here today in place within Elevity. Know and be confident that we've made these similar investments because we also believe it's critical, and we really do follow our own guidance here. But we got 5 minutes left. Would like to give people the chance to go into, you ask questions just through chat and Teams, so you can pop up chat, and those questions will come up to us as panelists. So it's okay. Your question won't go in front of everybody else unless we click allow. And then wanted to invite people. We do have a bit of a promotion going on here. If something here spurred your decision to, or a thought to maybe get out ahead of this project within your own business, if you use this QR code, hover over it, it'll send you to a link. I'm almost sure that link is not a virus. Fairly confident. But if you go to that page, you can request time to have a consultation with a member of our team. and in partnership maybe with Arctic Wolf, or maybe just about your strategy in IT overall. And for those that elect to have that meeting with us and have that good partnership discussion about where this might fit in, Arctic Wolf's been a strong partner of ours, and want to, while it's what is it? It's 10 degrees here in Wisconsin. I don't know what it is in Minnesota today, and I think our offices in Indiana and Ohio are getting hit pretty hard with winter and snow right now. We can warm up and off one of these really neat solos, which have been sitting with our marketing department, and they have not yet been taken by someone in our marketing department, which is shocking. Everyone has been eyeing these up for a while. So we'd love to have that discussion about your business and know your time is valuable, and enter you for a chance to win one of these really neat stoves and stay warm in these cold Midwest winters. But any questions from anyone? Otherwise, I'll kick it to you, Tim, for any final thoughts or wrap up. But thanks again for the partnership with Arctic Wolf, and for joining us today and sharing some of your industry experience with some of the Elevity customers.
I'm taking a look at the chat, and I don't see any, unless they're coming in somewhere else. One final thought, I'm actually just going to reemphasize something that Paul said earlier. And that is, in the illustration I gave you a few moments ago, the story that I told you about the customer, the manufacturing customer that I had lunch with, in that particular situation, the CFO said to the IT manager, yeah, I'd love to have you involved and be involved in these conversations, because technically, I don't know a lot about what these carriers are talking about. If you then in IT are like, hey, I'm an IT generalist, I don't even know what some of the security specific stuff is all about. That's why we're here. Paul mentioned it a moment ago. That's why Elevity is here. That's why Arctic Wolf is here. It's actually part of our service if you're a customer of ours, which is we get engaged with our customers to talk about things like audits and compliance, and how does what you do and the service that you provide meet specific requirements around risk management and vulnerability management, stuff like that. That's a big part of what we do, is the service that we provide is to help you through that process and really be that pool of talent and experts that you need to be in. Obviously partnering with Elevity on that as well for the things that they do above and beyond our services. So if you become overwhelmed by some of these requirements as the carriers get more sophisticated and get more mature, don't hesitate to reach out to us. That's why we're here.
Yep, agreed. Here to be your partners at the table. There's a reason our clients hit forward when they get those cyber insurance renewals, and I think they know that we're their strategic partner, and we're here to help them through those challenges and to help them make the right decisions for their business. Ultimately, that's what we're here to do. So thanks everybody for spending their afternoon, their potentially their lunch hour with us this afternoon. Thanks, Tim, for your time again. And here's our contact info. If there's any follow-up or any questions you may have, we'll follow up as well with just the recording and the content like Tim mentioned, so that you can be more prepared for your next cyber insurance renewal. Thanks everybody for joining us today.